Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to take Airbnb, which is a recent IPO stock, and we're going to pit it against some of the best hotel stocks out there. Try to get a gauge which one of these investments might be your best choice over the next 12 months. Now, I will say everything in the travel stock world has gone up quite a bit. In fact, most of these stocks, the historical ones, are seeing highs that are even above their pre-pandemic levels. So it's a very interesting market. There's a lot of expectations that travel is going to, pump these companies full of money. I have no doubt that they're going to perform better than they did in 2020. The question is, which one is the better pick for 2021 to get you maximum ROI for your dollar? Reminder as always that my stock picks and projections are just my opinion for your entertainment. However, if you enjoy stock market comparisons like this, going deep on stocks like Airbnb, give the video a like, subscribe to the channel. Thank you to everybody for your support. All right, so to look at things from a fundamental level, we're going to use two different services, Seeking Alpha and TipRanks. Both of these are great websites in my opinion. If you're interested in learning more about TipRanks, I have an affiliate link in the description. I do pay subscription for both of these tools on an annual level. All right, so as mentioned, we're going to take Airbnb and we're going to go against Marriott, Hilton, Expedia, and Wynn Resorts. So all of these stocks are in the consumer discretionary sector, and really only Expedia is the one that doesn't actually host tourists, if you will, or consumers. But I thought Expedia was an important addition just because of its technology. It's probably, arguably the closest competitor to Airbnb. All right, looking at the Seeking Alpha ratings for each of these stocks. Seeking Alpha has a quant rating for every stock. Airbnb is not covered, mostly because they just don't have the financial history and the sort of GAAP earnings history that the quant rating would use. However, across the board, you've got neutrals and a bearish view on Wynn from the Seeking Alpha authors rating, which is just, regular bloggers and folks like myself who would write for the website. You've got bullish on everything except Marriott and Expedia. Both of those are coming in at neutral. And from a Wall Street analyst perspective, you've got 5 bullish bets against all 5 of our stocks here today. All right, on the dividend side, 4 of the 5 names historically have dividends, but coming out of COVID, I don't know if any of them have re-announced. Obviously, Airbnb being a growth stock, it does not have one. The 4-year average yield, if we want to work that into the equation, Marriott has typically done 1.16, Hilton at 0.6, Expedia 0.95, and Wynn at 2.17. But at least looking at this chart, none of the 5 companies have announced anyway that they're going to reinstate their dividends here in 2021. All right, looking at future valuations from a PE non-GAAP perspective, you got fiscal year 1, 2, 3 into the future. Airbnb, no surprise, does not have a positive EPS in this time frame. Marriott would land at 62, Hilton at 60. Expedia may not hit positive earnings this year, and neither will Wynn, at least in these projections. Now, you skip ahead to next fiscal year, and that's when things start to change. Airbnb looks to turn positive, though it'll be sort of a microscopic earnings per share at this level. Marriott under 30, Hilton at 30. Expedia looks like they'll have the lowest if these projections hold up at 26.35, and Wynn at 78.63. When we get into the third fiscal year, you can see Expedia is still projected to be producing the best ratio. Marriott and Hilton are sort of neck and neck, and Wynn is the laggard of the traditional companies, but Airbnb will only be a couple years into their profitability. Now, on a GAAP forward PE, we only have 2 companies that would qualify for GAAP EPS looking ahead. that would be Marriott and Hilton, with Marriott showing the best ratio. On a PEG ratio, which you'd have to incorporate GAAP earnings, you've got Marriott at 3.82, Hilton at 0.53. Keep in mind that the lower the PEG ratio, the better, and in Hilton's case at 0.53, that's a pretty attractive number to see anything under 1. You just have to balance it along with the other metrics that the stock holds. All right, price to sales, trailing 12 months. So this is looking backwards. Airbnb at 14.5 times, Marriott 25.5, Hilton close to 26, Expedia 5.5, and Wynn 7.5. So price to sales, again, is one that you want to see lower. So in this case, Expedia is the leader and the laggard would be Hilton. But keep in mind, this is TTM, trailing 12 months. All right, now let's take a look at the projections for growth. So revenue growth year over year, that would be this year over last year. Argument is Airbnb would actually go negative year over year. Marriott, Hilton, Expedia, and Wynn, all the same thing, except, slightly more negative than Airbnb. Let's just look ahead to forward, because that's more important anyway. Forward revenue growth, 13% for Airbnb, minus 4% Marriott, minus 4% Hilton, minus 2.3% Expedia, and minus 1.7% Wynn. So Airbnb projects to do the best in that category. If we go revenue on a 3 or 5 year CAGR, we're not going to have enough data to do that for Airbnb. On Marriott, you go from minus 29% to minus 9%. Hilton basically stays flat. Expedia minus 26 up to minus 10. And Wynn from minus 33 to minus 14. All right, and we don't have a lot of forward EPS forecasts in these tools, but we do have one here. They're saying nothing on Airbnb, which may not even have an EPS to calculate. Minus 7% for Marriott, plus 0.38% Hilton. Expedia comes in at 1.21%. And then Wynn actually losing a decent chunk of EPS at minus 15%. All right, let's take a quick look at balance sheet. Total cash, $6.5 billion for Airbnb. Marriott coming in at the lowest with only $600 million. Hilton, $2.4 billion. Expedia, $4.3 billion. Wynn, $2.9 billion. And then total debt, Airbnb, $246 billion. Marriott, $11.13 billion. Hilton, about the same. Expedia, $8.9 billion, and Wynn, about $12. And on total debt to equity, you're missing a couple of these guys. 77%, 4,000 some odd, plus 239. Hilton and Wynn don't calculate. But just the eyeball view, the clear loser in this situation is Marriott. If they only have $628 million in the bank and you're carrying $11.13 billion in debt, they certainly have some work to do, particularly since $9.24 billion of that is long-term debt, at least calculated here on Seeking Alpha. All right, so that's a pretty interesting look across the 5 companies. I mean, I think the call out in there is, at least from a projections basis, really Airbnb is the only one that's projected to grow double digits in revenue. Now, obviously, the catch with that is they're also the only one to not be profitable from an EPS standpoint, and they also likely have no ambitions to offer a dividend anytime soon. Throw in the long-term debt of the hotel stocks, and Airbnb definitely sticks out as having some significant positives for folks who are investing today. On the other side, though, Expedia, which did have a decent chunk of debt, it was the closest thing to Airbnb when it comes to revenue growth and expansion, not to mention it had a little bit safer margin on its debt to cash ratio. All right, taking a look at TipRanks to see what analysts think of these 5 stocks. And the one we're paying attention to the most here is the price target upside column. Airbnb, you've got about a 30% upside projection over the next 12 months. Hilton, 0.57. Marriott, 0.10. Expedia, 11%. And Wynn, just short of 11 at 10.68%. All right, digging into each stock a little more closely. Airbnb, we got an update over the last 10 days here, and it's a pretty lengthy list. I'm going to start about, I guess right here. You got 1 hold, 2, 3, 4, 5, 6, 7, 8, 9 holds for Airbnb. And then buy 1, 2, 3, 4, 5 buys. And I guess the average upside, you've got a plus 31%, plus 42%. So those are on the high side. Most people are projecting an upside as I kind of eyeball through the list. But the most recent analyst has actually come in with a minus 8.78% downside. All right, taking a look at Expedia. We have a lot of updates about 17 days ago. That's probably when they had their earnings. And you got 1, 2, 3, 4, 5, 6 holds. 1, 2, 4, 6, about 6 buys. So split right down the middle. And you can see the upside downside percentage. Peak looks like 36%. You do have a couple folks coming in saying, this one might go down a little bit as well. So not a ton of immediate upside for Expedia based on the opinions of Wall Street. All right, next up is Hilton. Not as many fresh updates. We'll keep it within 20 days. 2 buys, 2 holds. Maybe flat on the upside price targets because you got a plus 9 and a plus 4. But actually this is, about minus 20 if you put these two together. So once again, you're seeing that people are being cautious in this kind of return to normal travel story plan that we have on the docket right now. All right, quick peek at Marriott. Several have come in over the last 14 days. All holds for Marriott, all holds. And looks like about minus 2% to minus 5% on the price projections for Marriott. Lastly, we have Wynn, again, about 14 days ago, and actually a little bit brighter sentiment over here. 3 buys, 1 hold. Looks to be about a 140 average on the price targets. Not sure why Wynn gets the benefit of the doubt. It could be because that is a resort chain that also offers gambling as a big part of their revenue source. So perhaps, dollar per square foot, the analysts are calling Wynn as a potential winner, if you will, over the next 12 months. All right, so the one thing that's pretty darn obvious on all the analyst projections is they're all pretty tentative to say that any of these stocks have monster upside over the next 12 months, right? And I think it makes sense. Like I mentioned in the beginning, some of these names are trading higher. Most of these names are trading higher than they were back in December of 2019. And we know that they're not all full to capacity. And even if they were full to capacity, it would take 365 days of the year to be at full capacity, probably before they would start comping the same kind of numbers that they did in 2019. Now, beyond that, from a fundamental point of view, we know that Marriott and Hilton were probably closest in terms of having an actual GAAP EPS that we could measure. But if you got into price to sales, if you went into non-GAAP kind of figures, there really is an argument for Airbnb if you come into it and you say, I'm going to invest in travel. I'm going to invest in hotels specifically. I would say, quite honestly, from a risk-reward ratio, Airbnb definitely has some risks without having earnings and being a new stock and all those things, not to mention regulation, if we start to see more hotel rules and stuff like that. However, considering what you're getting on the flip side with a Marriott or a Hilton, I think Airbnb might be worth the risk at its current price. On my side, I'll be kind of considering Airbnb versus Expedia, but there's almost no way I buy into these stocks right now at their current market levels, particularly after seeing the projections and debt levels that we just went through. If I had to buy one today, I would probably lean towards Airbnb, but just for me personally, I would actually like to see Expedia come on there and see their price go down a little bit, because they kind of offer some of the same things as Airbnb with VRBO. And then they have, of course, the whole bookings front that can span anything from restaurants to cruise lines to hotels to car rentals. So I'd rather have a piece of that in the long run, just my 2 cents, but probably not at its current price. All right, guys, let me know what you think of this comparison between Airbnb stock versus the other hotel stocks. Which one would you pick if you were investing? Really appreciate everybody watching, giving this video a thumbs up. Thank you very much. We'll see you on the next video.